I'll be frank. If you're new to investing and you go on YouTube looking for some advice, YouTube's going to send you to some wackadoos out there that keep telling you that these high, hyped, overpriced EV companies are the wave of the future. And we've been saying it for years now, Paul, that you don't exactly have to invest in what everyone else is doing.
In fact, it's been proven that if you do that and you chase the crowds, you lose in the long run in the markets, 1,000%.
That's your whole stance, basically.
Yes, my stance is singles and doubles score way more runs than trying to hit grand slams.
This is a more disciplined, slower, patient investing style, but we rest easy knowing
and you make more money.
And you make more money.
Now, the problem is you make less money when everybody else, including your neighbor's 18 or 17-year-old son or daughter, is trading at lunch and making a lot of money. So you have to sit there and have the discipline of saying, wait, what's fundamentally going on here? If I were a business person buying a business, would I pay this number?
So while all the other channels are telling you that Nio and Tesla are still going to the moon, even though they're not, we're here to show you the financials behind this company. Now, Paul, I would be wrong, is that Nio, in the past, I said, does China have the infrastructure to have EV cars? Well, sure enough, whether they're propping up just one or a couple places, they do have these battery swapping places in China. There is potential. However, like I said, if you've been watching YouTube, they've proclaimed this stock Nio is going back when it was 60 at the turn of the year. They're saying it's going to 100 and further. Get to Champagne out. It's headed that way, and it has since it dropped quite substantially. Tesla, the same way. When it was at 900, who would have thought that Tesla could ever come back home with all the amazing things they're doing? And Paul, I've seen some Tesla videos that are just completely just mind-boggling. You just burst into laughter. But today, we're going to show you why we think we're laying off these two companies at the moment, because frankly, they do not make the money and the revenue to prop up their stock price to wherever it is.
To justify it.
Thank you, Paul. So let's pull up Nio in the Everything Money software and show you what I think other people are not. And of course, the comments will be littered with "we don't get it." But by the way,
we don't get it. I absolutely do not understand how anyone with half a brain can look at this and say, wait, this is a really good investment. Now, could it end up being the two biggest car companies in the world? Absolutely.
Yep, absolutely.
But if you bet on 100 of these situations, you lose money on the vast, when I say vast majority, 95 to 98% of them. So you're banking on finding the one or two that actually do hit it big. More power to you. But at these levels right now, you're going to end up in a world of hurt. If you don't believe me and you're a student of history, go back to every major bull market, every market peak, and tell me how it went for people there. You don't have to go back to 1928, the Great Depression. Go back to 07 in real estate. Go back to 2000 and the internet age. Go back to 06, 07 and the financials. Every bank in the world was making money hand over fist, giving out loans to every single person. And then all of a sudden it came crashing. It always comes crashing down. Amazon is at $3,300 a share today. In 2000, it hit $107. It's a huge return, right? What you don't remember is it went down to 6 from 107. 6. And if you're telling me, see, I told you, you would have never stuck around on Amazon because you are too stupid to understand that the same reason you bought the hype, you would have bailed on the downside. Look at Bitcoin today. It's at $30,000. It was at 64 just a month and a half ago. Is it still up a lot from 6? Absolutely, it's still up a ton. But how can something so stable be up and down 150%, all these things over and over?
So I have this question with a lot of normal people, and they keep seeing this, Paul, and I have to back them off as like, why would you buy a company that costs so much but produces so little? And let's show them the numbers. Why would you be foolish to do so?
So market cap of $70 billion. Mo, can you do me a favor?
Yes.
Can you find me 3 companies that have a market cap of around $70 billion that actually make money?
Sure.
No income, so no PE, no profit margin. Their gross margin is 16%. Guys, this is a car company whose gross margin, that means every unit they sell, how much that's profit. I believe Honda and Toyota have a higher gross margin than 15.7%. To which you're going to say, you're comparing it to Honda? Yes, because it's a car company.
Yes.
They make cars. Just like when you eat something, and a nutritionist will tell you, if the biggest component of it is fat, it's a fat. If the biggest component of it's a carb, it's a carb. If the biggest component of it is protein, it's a protein. They make their money off cars. They're a car company.
We're going to compare it to some car companies.
Yes.
And even if those car companies aren't around, which, boy, Paul, some of these EV things that the other companies make forward, your Porsche's out front I just saw for the first time.
Oh, did you like it?
Stunning vehicle.
Yeah, it's
this
pretty
is
nice.
Somewhat electrical or?
It's 100% electric.
No way. Swing. All right, let's look at the
We landed on the moon.
the meager revenue growth for Nio.
No, it's not meager revenue growth. It's insane revenue growth.
That's where I'm wrong.
Yeah, look, as this says 0 in 2018, 3.54 billion today. It's a lot of revenue growth. I mean, they're in China.
I'm a cold-faced liar here. I'll keep going.
Now the profit, loss of 700 million, loss of 627. Check mark.
They're losing less money.
They lost 3.2 billion along the way, 3.3 billion along the way.
So are they just growing? Where is this money?
Well, they're growing something. Ready?
Oh boy.
Shares outstanding, 848 to 1.55. For somebody watching it right now going, yeah, it's a stock. That's not a stock split. Because if it was a stock split, this would have increased along the way too.
Paul, by offering more shares, you have more people who are interested in the company and the market cap goes up, which is great for all investors. Prove me wrong. Uh-oh.
Okay, I'll prove you wrong. Ready?
Okay.
2019, they had $1 billion in revenue, right?
Yes. Uh-oh.
Let's actually look at it this way. Let's prove it wrong this way. Let's make it even easier. A company has $10 in profit, and they have 10 shares outstanding. Okay?
Mm-hmm.
How much is that per share?
Dollar per share.
$1 in profit per share.
Mm-hmm.
Great. Now all of a sudden their profit skyrockets to $20. Impressive, right? But they increased their shares to 30 shares. How much is it per share now in profit?
60 cents?
66 cents.
But Paul, I don't see that profit. I only see the ticker price go
You
up.
do see the profit. And here's how you see the profit. Here's how the ticker price goes up. Over a long period of time, the bank account gets bigger, the cash flow gets bigger, the debt gets paid down, everything in the company gets better, and that makes it more attractive, and the share price goes up because of it.
But in the short period of time, didn't my price just double and I can make some money there?
You know, they just issue more shares and it does that. However, if they issue too many shares at one time, that's why you see companies issuing a little bit at a time. They usually don't double in one market offering because then people will say, wait a second, they do it a little bit at a time, so it just sneaks in a little bit. Mm-hmm. Oh, we have 1 million more shares. It's 1 million times $30. It's $30 million more market cap. But eventually over time, it all weeds its way out, right? It eventually gets found out like, wait a second, we have 100 million more shares now. Revenue's up, profit's up $100 million, but it's 100 million more shares. It really didn't do anything to us. Mm-hmm. Do you follow?
Yeah, I do.
Okay.
So there's our shares outstanding, which is pillar number 5. How about pillar number 6 for Nio, which is current assets over current liabilities?
And guys, this is our software. You can get the software by joining our Patreon. You get all the software. You get all the updates. You get a stock analyzer tool. You get the 8 pillars software. It'll tell you all the 8 pillars. You get a real estate calculator. You get all that. You get the Discord community with over 3,000 members in it talking about investing. I was just in it this morning looking at all the conversations happening. I'm like, people are literally, hey, I had this idea about this company. Did anybody have any ideas? Am I wrong on this one? And it's just incredible.
It's a full functioning community. I mean, even if we slack off talking, they go after it.
Oh, it's incredible. And it's 80 cents a day. And you're locked into that price for the foreseeable future because as our price goes up, you get the price you signed up at.
This is the Patreon. Join below. Keep going, Paul, with Nio.
$8 billion in cash, 2.6 in current liabilities, 5.3 overall. So they have a very good cash position. Very good. Free cash flow.
Free cash flow.
All right. It's bad. It's an X. Everything is an X. It sucks. 8 pillars. I mean, they have revenue growth. They have net income growth. They have assets versus liability. Yeah, it's just all sucks. But you see a lot of checks there. This is all misleading. 4 checks. It's very misleading.
Well, what are some companies that cost $70 billion that actually make money at the moment?
Activision Blizzard. I did a range for $70 to $75 billion market cap. Nintendo, Sherwin-Williams. Those are just 3 notables on there that are worth $70 to $75 billion that make profit. Amazing how that works.
How amazing.
And they make a lot of profit. And that's the thing, guys. Your goal as an investor is to buy as much revenue and profit and potential as possible. So let's do our stock analyzer tool on Nio.
Go ahead. You want to talk to Mo about trades while you fill it in?
No, let's just look at it, guys. Let's just sit there and say, okay, let's assume Nio has 50% revenue growth for the next 7 years on the low side, 75 on the high side, 100% a mid-size, and 100%. I'm just showing this to say how ridiculous this is.
100% revenue growth.
100% revenue growth for 7 years. That means 3 billion becomes 6, 12, 24, 48, 96, 192, $380 billion in revenue from $3 billion today in the next 7 years.
Apple currently does 60 in.
No, Apple currently does 170 billion in. No, what does Apple do? Yeah, bottom line is Tesla does like 40 billion in revenue, 35 billion. So it would be 10 times bigger than Tesla is today.
Okay, so it's huge.
Honda does 150 billion. I mean, it's an insane number. Okay.
Okay.
Share change. They're going to issue a ton more shares as time goes on. 5. Let's go 7, 9% increases. Profit margin. Let's give them a profit margin of 6%. I'm just going to keep that steady at 6%.
Okay.
Generous.
Free cash flow as a percentage of revenue. Let's go 5%. What it did last year. What's the stock currently at?
What do we got?
$44.
$44. So assuming the best case scenario, you only have double your upside potential here.
Wow.
Assuming it grows 100% a year, because guess what's happening? You're getting diluted the heck out of. On the low side, 50% growth, 5%, it's worth $15, $12. And this is still assuming 50% growth a year for the next 7 years.
And that number is still incredible.
Guys.
Uh-oh. I know where he's going with this.
Guys.
Slam your head in a Nio door.
If you believe this to be reasonable,
Here we go. We know
I would like you to get up,
Oh, no.
go to your garage. I want you to open the car door there for the garage. I want you to place your head squarely between the car door and the frame.
Oh, boy.
And then I want you to take, preferably if you have a spouse or a kid, have them just come to the other side and just slam the door repeatedly into your head until you start oozing out the blood, because you literally don't use the blood for your brain. You have no desire to use that blood in your brain. Now, does this mean it's not going to happen? No.
That's true.
But if you have 100 of these situations that rely on this to even double your money, you are an idiot.
You know, Paul, it's all the. I feel like it's a lot of the young folks that say that this is what you're saying is complete.
Well, yeah, young folks. And by the way, young folks are stupid.
They don't know. If you explain this to like an old dad that has like,
no,
like,
they still don't get it either.
Really, you don't think with like?
Listen, I still hear all these. You don't get it, Paul. It's not how. The funny thing is, I get it from old guys who have businesses.
Uh-oh.
And I'm like, wait a second. You have a business. You bought businesses. You can sell your business. Why would you even think this is reasonable?
You know, we got a comment yesterday, Mo, and I was very proud. It said, "I've."
Should we all make the obvious statement here?
No, listen to this,
Okay.
Paul. Somebody said, "This is the only YouTube channel that consistently tells you not to buy." It's like, I responded like, "We're very proud of that." Like, we
in
own
the investing
30
world,
companies.
guys, there are 10,000 stocks out there. Your goal is to find 20 or 30 to buy.
And
That's
guys,
it.
when the market falls apart, we are going to be the only ones telling you to buy.
Yes.
And everybody else is going to be saying, don't buy this. This is garbage. This is dead. That's going to be the difference. We are eventually going to be the only channel out there saying, you need to buy
You
this.
out there, if I asked you who the best investor of all time is, you'd say Warren Buffett, right? You all would say Warren Buffett. And he would sit there and say, you should treat investing like a punch card. You can only punch so many times. If you treat every investment like that, the second you make it, you cannot make another investment. You get one less investment in the future, you'd be a lot more. You guys look at it as, oh, I need to get in, I need to get it. No, find the best investments and stick to them. The best value investors own 20 or 30 stocks on the high side. High side. Just listen, I know I'm being mean by saying you're stupid, but I'm sorry. If you believe this to be the case, I have no other word to describe it than stupidity.
Mm-hmm.
I have no other word to describe
math.
it. It's just math. You are literally telling me 2 + 2 = 300. That's the way I look at it.
Mm-hmm.
I just don't get how this can be okay for you. I literally went to an extreme version. By the way, I actually thought the numbers would be higher. I went to this extreme version. I thought this was going to be like 500. It's barely even double the price right now based on these extreme versions.
Paul, this thing got up to like $60-something, $62 in January. I mean,
And I'm sorry, that extreme version, that is disruptive. That's the disruptive numbers right there.
Yeah,
so
that's
those of you
gonna be
that are
disruptive.
saying this is
By the way, I thought about this the other day.
That's disruptive right there.
Name a company that's majorly disruptive? Amazon. Why doesn't ARK have Amazon in their portfolio?
yeah, they've skyrocketed too.
To me, Amazon has been disruptive. They changed the way everybody shops.
Yeah.
1,000,000%. Right?
Yeah.
Mo, are people trading Nio with this malarkey?
You know, a lot of people are trading Nio. A lot of people are coming over to our Patreon from these other clowns out there and saying, please help me get out of Nio, recover my profits on Nio, do whatever. So this was your all-time high, whatever it is. And now you can just see it's just stuck consolidating in this area. So right now, you're not in a downtrend yet, but you are getting there. So my suggestion would be take profits right now because we don't know if we're going to be able to break through this level going higher. That's really all I got. You could probably short this at some point when it does become a downtrend, but right now, take your profits on this thing. You might kill me when the thing jumps up here because
Remember, it's
of
about
some
process.
crazy news.
It's about process.
I can't help that, and I would rather lock these gains, these little gains in my pocket, than make 60% in one day for no reason.
It's about
battery
process.
is really cool.
Mo is teaching a good process. The process will be wrong, but over long periods of time, it will be right.
you're
That's
gonna
the
win.
way it is. Yep. Now, Tesla. I don't want to go through all the financials. I want to skip the 8 pillars and skip the stock analyzer tool.
Sure.
These are the 8 pillars of Tesla. They're issuing shares like crazy. For that other moron who's on YouTube who says, oh, their shares are going to stay the same in the next 10 years, you're stupid. No free cash flow. All this thing is over the last 5 years. PE of 536. Nice work. Great profit margin, 3.1%. I gave Nio a 6% profit margin. Net income, blah, 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 blah. Let's go to the stock analyzer tool.
Paul, Chicken Genius Singapore said that Tesla's other streams of income, Mo, not just cars, will beat their car output, Paul.
It's absurd.
Great.
The energy,
Great.
that will be more than their cars.
Great. And Workhorse would do, guys, I don't think, if you believe that 10 years from now you can make an assessment on a company reasonably, then you are delusional. You're delusional. And guess what? 10 years from now, when Tesla's not doing those numbers, and you go, it'll be another new company, you're like, no, but this one's different. Obviously, Tesla wasn't going to work. It was selling for 600 times profit. Give me a break. Of course it wasn't going to work out. These are the conversations that are going to happen. Now, let's put Tesla in. I'm doing a 10-year analysis because our one friends do that.
By the way, Paul, I want to show you this. You said 10 years. Here are the top 10 stock performers of 2010. Netflix, Crocs, Riverbed Technology. Where are all those videos about Riverbed? Chipotle, Amtel, F5 Networks, Cummins. I mean, these are big disruptive companies, Paul, that are still around, cranking out the revenue. Decker's Outdoor. Where are the videos from our YouTubers about Decker's Outdoor? Obviously, you've never even heard of these.
I love Decker's Outdoor.
Isn't that incredible?
Great stuff.
I mean, disruptive stuff.
Where's Decker's Outdoor?
I have no
We're
idea.
just-
Oh, really? I was like,
making this up.
wait, I remember it fell on one of our stock scooters once.
Oh, really?
Yeah.
Keep going.
So, this is going to be the argument's going to be the PE at the end of the analysis for Tesla. What PE are we going to give it? I'm going to give it a very frothy 25. So somebody says to me 25 is too low. It's because you're comparing it to what it is right now. Now, let me make the analogy I said before in another video. If you're choosing between 3 life mates, one cheats on you once a week, one cheats on you twice a week, one cheats on 3 times a week. Do you automatically marry the one who cheats on you once a week because, hey, it's less than the others?
Yep.
No, you just don't get married, period. You're sitting here saying, well, the price of free cash flow right now is 500, so it's okay that 25 is really too low. It should be 100. That is absolute lunacy. That's absolute lunacy.
Well, I don't know if all our viewers are actually, you're saying this. I don't think they grasp the understanding, which I didn't, Paul. As a former owner of 140 shares of Tesla, explain to the people who aren't against this, they just haven't known this information quite yet.
What am I explaining?
Like how to determine a stock price.
Okay, so a stock price is the present value of all future cash flow. As revenue increases, cash flow increases, earnings increase, balance sheet gets better, et cetera, your stock becomes more valuable because the market deems it as a better company. But I want you guys to see one thing, a few things. Revenue growth. 10 years, 79%. 5 years, 43%. Last 1 year, 38%. So where is this going, up or down?
Down, but Elon says a consistent 50 is very obtainable, 50% a year.
Really? Why didn't you do it in the last 5 years then?
Well, they're just going to be so much more bigger moving forward, of
Okay,
course.
then we'll put 50 in. Let's just do something crazy. Let's go 40, 50, 60%. Share change. They're addicted to issuing more shares. So the idiot, by the way, the idiots meet Kevin. The idiot who says they're going to keep shares the same for the next 10 years is absolutely, what's the word?
Asinine?
Stupid.
Future governor of California, too.
Yep.
So let's sit there and say 3, 4, and 5%. Profit margin. They don't have really any profit margin. Let's give them 5% though, across the board. Free cash flow as a percentage of revenue, I'll go with 6. Analyze. All right. So right now, based on these huge assumptions, the stock looks like a deal on the lowest assumption. Pretty good. On the highest assumption, awesome. You're probably sitting there going, see, look at it. Guys, what's 60% a year? What did they do last year in revenue? They did $36 billion last year in revenue. 60% a year for 10 years times 35 billion. They have to do $3.8 trillion in, is that right? That can't be right. 1.6 to the 10th power times 35 billion. $3.8 trillion in revenue for it to be worth, for this stock.
When?
In 10 years, for this stock to be worth $1,400 a share today.
Well, doesn't Apple do like $2 trillion in revenue right now?
No.
Oh,
We're not. Hold on a
Okay.
second.
Do you understand this?
Paul, I just saw a video where Chicken Genius said that in 10 years they'll do $1 trillion in revenue and be worth
Well, yeah, you know what he did?
$4 trillion.
You know what he did? He changed the future PE to 100.
this is just insane.
Great. Look at the stock price.
Yeah, that's where they're going. Yeah,
That's all they're saying. Is like, well, the PEs, I can change this. I can change the subject all day. Do me a favor. If anybody in history can find me a mature company.
Or woman,
Okay.
that you like.
Yeah. Let's look at it this way. Let's look at the biggest companies out there right now. Let's look at Apple. What's their PE? Apple PE. Currently, 29. Close to 100. Microsoft. Current PE, 35.
These are the biggest, best, most established companies.
But Paul, those aren't disruptive.
Google.
Google's nothing. This stupid.
32. So let's go back to Tesla
Oh boy.
and let's put in that 32 is the 35 is the highest one we saw. Stock analyzer tool. So let's go to 10 years, 10% return. That's only assuming 10% return. PE of 35. Again, 40, 50, 60%, 5, 6, 7. Profit margin of 5. Free cash flow. All right, great. It's worth what it's worth at today based on a low assumption. Great. You have to hit all these numbers. You have to hit these huge numbers though. 40% revenue growth a year over the next 10 years. 1.4 to the 10th times 35 billion has to do $1 trillion in revenue to be worth what it's worth today. To be worth what it's worth today, based on what I think are very, very frothy assumptions, it has to get 40% revenue growth a year. It has to be $1 trillion in revenue in the next 10 years.
And meanwhile, Tim and I called multiple Tesla dealerships all over the country yesterday. We did our research, Paul. They don't have any cars.
Nope.
If you want to buy one today, you can't get them. There are 2 on the eastern seaboard. And if you want a car and you got the money today, you'll get it in September. Maybe Elmo, by the way, your car, no.
Oh, I know.
No. They told you September, it's
Yeah.
next year.
100%.
They told me next year.
And by the way, I tried to go, all I wanted Paul to do was test drive a Model S. The old model, not the new one coming out.
Oh.
They said 4 months just to test drive the car.
Why do we do all this, Paul? The point is, guys,
Listen, I was very mean in the last few videos, and I feel kind of bad about it. I call people stupid, and I know it comes across very arrogant. But at the same time, I look at it saying, what would you have to be to believe that Tesla is going to have $1 trillion in revenue in 10 years? $1 trillion in revenue. No company on the planet does $1 trillion in revenue. Walmart is the biggest retailer in the world, and it does $500 billion a year in revenue. I just don't even have to sit there and hit that, and hit all of these, and hit have 35 PE. Which, by the way, those companies that are 35 and 30, the biggest companies, are literally during the biggest bull market euphoric time. Michael Burry of Big Short says this is the most overpriced market by what does he call it? By twofold, 2 magnitudes.
Yes.
So in order to get the 35 PE, we were literally in the worst market in history. Think about this logically, people. Just please think about it logically. That's like marrying your spouse and saying he's going to stop cheating on me because there's going to be everybody in the world's going to be dead. He won't be able to cheat on me. Like, it's literally not even fathomable.
so we do all of this, folks, because we do get a lot of hate from the comments.
Love the hate.
Which we're fine with. But,
Bring it on.
But really what we do is we get multiple messages a day about how this message has changed people's lives, including my own, in that they listen to these other yahoos on YouTube, they lose their ass, they lose their money, and when they finally find us, they get some calming sense of, oh, this is why this math leads me to this price. And so if this resonates with you, you're welcome to join our team. And it's a lonely team, Paul. When you go to a cocktail party, when I go to weddings and talk to people, they want to tell me about all these high-flying stocks, and I'm like, yeah, you probably won't be drawn to our company because we actually look at the fundamentals and math behind some of these picks, and we're very disciplined about it. So if you're drawn to this, join our Patreon. You can get in our community of Discord. You can talk to people who think just like this. Look around other Patreons out there and YouTube channels. We have an astronomical number of subscribers who are patrons. It's a large number of our subscribers are actual patrons because we provide so much value in this conversation. Just getting a better understanding about these insane companies, these insane stock prices you should probably avoid if you want to make money. And of course, Paul, over the past 3 years, there are people like Meet Kevin where their portfolios have jumped from $600,000 to $20 million because they're in Tesla. Of course, not after this big pullback, but it can happen on the short term. But we want to teach you a process for a lifetime. So
That's it.
that's our take.
And that's it.
Bottle the thumbs up on the way out.
Join our Patreon.
Thanks for watching.